USD/yen did not just spike lower and bounce. It broke in two waves. The rebound between them failed, and the week closed near its low. That is rarer, and more revealing, than one dramatic candle. The chart is no longer asking only what happened on Thursday. It is asking a harder question: was this a temporary shock, or the start of a genuine yen repricing? 1 week cannot answer it. But it can separate what the chart proves from what the headlines only suggest. Here are the completed bar numbers. Across the 5-day hourly window ending July 31st, USD/yen moved from about 163.61 to 157.40. That is a decline of 3.8%, with a high near 163.95 and a low near 157.15. Against the absolute 5-session moves of the prior year, that lands around the 99th percentile. In plain English, roughly 99 comparable windows out of 100 moved less. The closing location matters. Friday did not finish back in the middle of the range. It finished only about a quarter of a yen above the weekly low. A fast move can still reverse. This one remained largely intact when the week ended. Now look at the path. The pair stayed near 163 through Wednesday. On Thursday it broke decisively through 160. Friday's repeated rebounds failed before another late move reached the weekly low. That is why a single explanation is dangerous. Market reports discussed possible currency intervention, while the Bank of Japan kept its overnight rate guideline around 1% and one board member preferred 1.25%. Those facts can help explain why traders suddenly cared about the yen. But the chart cannot prove who sold dollars or why. Price proves the break, the failed recovery, and the weak close. The intervention story remains a reported possibility, not a label we can stamp onto every red candle. RSI adds another useful complication. The simple average, or Cutler, version finished near 31 after falling as low as 8. Wilder's original smoothing finished near 30 and fell as low as 10. Both formulas agree that momentum became deeply weak during the sell-off. They do not agree about the other end of the week. Cutler RSI had reached roughly 74 before the break. Wilder RSI peaked near 67 and never crossed 70. Same price. Two formulas. Different labels. That is not a flaw to hide. It is a warning not to build the entire story around whether one oscillator touched an arbitrary line. The more robust evidence is the sequence. Price held near the highs, broke through 160, attempted several rebounds, and still closed near 157.4. Both RSI variants ended near 30. The direction and the closing location agree even when the formulas disagree about the earlier extreme. This is also why calling the pair simply oversold is incomplete. Oversold describes recent momentum. It does not tell us whether the move was excessive, whether it must reverse, or whether a policy-driven repricing can continue. So how can we distinguish shock from trend change? 3 observations can settle the classification. None of them is a trade instruction. First, watch 160. It is the round level the pair broke and briefly revisited. A recovery that can hold above it would erase part of the late week damage. Repeated failure below it would leave the break structurally intact. Second, watch whether both RSI formulas recover through the midpoint. A bounce that lifts price while momentum remains below 50 is different from a broad reset in both versions. Third, watch the next closing location. A move back toward 163 would make this week look more like a shock. Continued closes near the lows would make the repricing interpretation harder to dismiss. The experiment is not to guess whether intervention happened. It is to observe whether the market can undo the structure that the suspected event left behind. USD/yen just produced one of its largest 5-session moves of the past year. The close says the move survived the week. The next closes, the 160 recovery test, and momentum across both RSI formulas will tell us whether it survives longer than that. Subscribe for the next Weekend Lab. And follow the daily market notes at Market Validation Lab on X. The link is in the description. That is where I will track whether this yen shock develops into a broader reversal, or remains only a remarkable week.